After this payment, I finally own my car 100%. I managed to pay off my $9,500 car in just 6 months. Let me teach you how. Hey everybody, this is your Young Advisor, and today I'll be teaching you about car loans and how I managed to use my strategies to pay off my car a lot quicker and save money over time. Just a quick disclaimer, this is not financial advice. I am not yet licensed, so just take it how you will. This is just my personal experience. Enough of that said, let's get y'all to be car owners. Over the past couple years since COVID, interest rates have not seemed to cool off and have only gotten higher since then. That makes borrowing a lot more expensive, and as of right now, it's about 8% to finance a new car and about 12% to finance a used car. And with how expensive everything's been getting, is not really helping our pockets at all. Just to put in perspective, if you finance a $20,000 brand new car at current rates of 8% for 5 years or 60 months, it would be about $24,331, which is $4,300 extra you'll be paying just because you borrowed the money. And with that same situation for a used car at current rates, which is 12%, you'll be paying $26,693 over the course of the loan, which is about $6,900 extra you'll be paying just because you borrowed it, which is insane. And just a quick recap on loan payments, there are two things you want to pay attention to. Number one is the principal, which is the original amount that you needed to borrow. So in this example, it would be $20,000. And the second part of the car payment is the interest, which is the amount of money you have to pay to borrow the money. Of course, the banks aren't going to give us the money for free, especially if there's a risk involved, so we need to compensate that with the interest paid. Enough about that, let me tell you how I managed to pay off my car in 6 months. Of course, it's going to be different for everybody because everyone is in their own financial situation, but I'll just tell you how I managed to do it. As much as I want to tell you guys pay extra than you owe, everyone's in a different financial standpoint, and as of right now, the median checking account in America is $2,800, which doesn't leave too much room to spend extra, especially considering about other expenses such as rent, groceries, utilities, and all of that extra stuff. But even then, there are still a few strategies that you can use to pay off your loan quicker and avoid paying more in interest. It really ultimately comes down to how well you can budget your money and how well you can manage your cash flows, which I will be talking about a little bit. Number one, which is the most obvious and which I just talked about, is to pay just a little bit extra on your car note or give an extra payment. So instead of 12 monthly payments, maybe do 13 or even 14 if you can. Not only does this help you bring down the loan, this avoids you paying more interest because interest is calculated daily on the amount of principal that you have left on your loan. So the quicker you're paying that off, the less interest they can charge to your account, saving you a lot more money on the long term. Just a little background on my situation, I was getting about $2,000 a month and paying a $1,000 car note every single month as well. And like I said, everyone's situation is going to be a little bit different, but most of my expenses such as food, room, and textbooks and all of that were paid through student loans, so I was able to focus most of my income into paying off my debt, which was the car. And the biggest thing that helped me to pay off my car was to literally ignore my money. For example, if I paid $1,000 a month and I had $1,200 in my checking account, I only paid attention to $200 because I allocated that $1,000 to my car. So the $200 I had left was the rest I had to use to budget until I got my next paycheck. For example, if you have a $500 car note and you have $1,000 in your checking account, you're gonna completely ignore this and only use this money until you get your next paycheck, so you don't even have to worry about your car note. From there, that'll be up to your budgeting skills to make sure you have that car note set aside. But don't stress, because if you can only pay the minimum for that month and you can't pay extra, it's okay. Remember, as long as you're making on time and regular payments, you're still building healthy credit, which will only help you in the long term. And in an ideal world, you would be investing, saving, paying off your debts, and paying off expenses at the same time. So if paying extra on your car loan takes away from those other categories, it's okay that if you don't pay extra. It's just that paying a little bit extra will help you bring down the cost of interest over time, saving you money. The biggest thing with me is I just wanted to pay off my loan as fast as possible so I can use all my future cash flow into investing and saving in the other categories. Because keep in mind, investing and saving don't cost money. Taking money from a bank does, because you have to pay it back. But also keep in mind, if you could invest and save at the same time while you're paying off your car loan, you could be making more money on the side. So make sure you balance those accordingly. So all things considered, the more you pay extra will mean the less you pay in interest, meaning the total amount that you pay over the term of the loan will be closer to the amount that you originally borrowed. But let's say you don't have the extra money to contribute to your car loan. What do? The number one thing you can do is refinance your auto loan, which is similar to refinancing your home. As I mentioned previously, interest rates right now are the highest they've ever been in years. If and when those rates come down, that would be the perfect opportunity to refinance your car loan and save more money. When you refinance your car, the bank is going to analyze the current value of the car. So assuming you drove it for a good amount of miles before you refinance, the value is going to be a little bit lower, meaning the loan will be a little bit cheaper as well. The biggest mistake you can make is extend the term when you refinance it. So if you have 2 more years to pay off your car and you decide to refinance, do it for 2 years or less, because if it's more, then you'll be paying extra money that you didn't even have to pay if you didn't refinance. Also, assuming you've been making on-time regular payments, your credit score should have increased, meaning you will get approved for a lower rate as well. Another thing you can do to get a better rate is try to finance your car through a credit union, which is about 2% less than the national average from a bank. There are thousands of credit unions across the nation, so if you can qualify to join one, that's your perfect opportunity to save a lot more money. Another thing that shouldn't be a surprise is buying used cars. Even though interest rates for used cars are higher than new cars, they're not valued the same, so you'll be taking out a smaller loan for a used car, so you'll be paying less over time compared to a new car with a lower rate. And with that, some people are gonna have to swallow their pride to drive around in a used car. I know I had to when I got my first one. Right now I have a 2012 Honda Civic, which is a little bit older compared to my friends. But the biggest thing about that is I still have the same amount of money to my name right now as compared to before I even bought the car. Even considering I paid extra on my payments every single month. So you can do the math on that a little bit and see how much I saved. So as of today, I can say I fully own my car, but some people are still paying off their car just because they wanted a newer model. And even if you want your brand new dream car, if you don't have the proper cash flow coming in, it'll be really hard to budget for your day-to-day life. And I know a couple people with nice sports cars, but they're also getting paid just above minimum wage, which if you're considering insurance, gas, and car notes, and that's just for the car, it's hard to use your money for other things that you may have, such as rent and groceries. That's why I'm okay with driving an old car until I have a bigger paycheck so I can finally buy my Porsche Panamera. One last thing to consider to make your car payments a little bit less is your down payment. Again, this is all up to your current financial situation, but if you can aim for 20% or even better, it will bring down your payment significantly. The good thing with car loans is that the down payment varies significantly, so you could even get away with putting 0%. But please keep in mind, the less you put down, the bigger your payments are going to be, so you might be paying more than your car is worth over time. But of course, if you have a good credit score, you're going to get approved for a lower rate. So if you need more tips and tricks on that, I have a video right here explaining the basics. That being said, using at least one of those strategies will help you pay off your car quicker, saving you more money in the long term. Thank you for letting me be your young advisor today and giving you tips on your auto loan payments. I also want to thank you guys on how well my previous videos have been performing. I can't believe my last one got almost 2,000 views, so I really appreciate you guys. Let's all get rich 2025, and continuing to educate yourself on topics like these will help you get there quicker. That being said, thank you guys for your time, and feel free to watch my other videos to get more advice. Thank you guys and have a great day.